any other calculation so that a borrower can compare apples to apples as they shop around for other loans with other lenders that may have different terms. At the end of the day, this is about making a market work better through transparency and disclosure. When this was first proposed 3 years ago, Illinois was on the leading edge of being one of the strongest states for financial protection. On this issue, we're being left a little behind. New York and California have passed and implemented similar laws, and credit for small businesses has not dried up as many of the opponents have tried to convince legislators here in Springfield. When I asked the president of the National Trade Association of non-bank lenders if any of their members had to close because of these laws being passed in New York and California, she mentioned a few had, and I told her that those are probably the members she didn't want in her association because once pricing was transparent, they couldn't compete even with other members of the same association. She reluctantly agreed. Just a few days ago, the Maryland State Senate just passed an identical bill unanimously out of that chamber and with the support of the Maryland Bankers Association. So we're hoping the Illinois Bankers Association will take a similar role here, and if not, we'd really like to know why. Because APR has been the gold standard of loan costs for decades. It gives the borrower one clear number that shows the real price of credit. Consumers have relied on APR for generations when taking out credit cards, car loans, mortgages, thanks to the Truth in Lending Act of 1968. People know what it is, and we know from talking to business owners that they've come to expect it as part of the terms of a loan. And that's why non-bank predatory lenders provide borrowers with deceptive interest rates that look identical to Truth in Lending Act disclosures. Again, what we're proposing is not an interest rate cap or a mandate to only use APR to price the cost of loans. All we want is fair and consistent pricing so small business owners can make the best choice for them. And that means including APRs that provide tools. So let's get this done. It's been 3 years. It's not too soon. Other states have passed similar laws and financial Armageddon didn't occur. And small businesses are struggling enough without deceptive predatory small business loans dragging them under. So with that, we have a cadre of very important and influential leaders that are going to provide their own comments with regard to their support of this bill and this movement. Included in that is our august and tall State Treasurer, Frerichs.
Horacio, thank you very much. It has been a pleasure over the years to work with Woodstock Institute on a variety of consumer protection bills. It has been a pleasure to work with Representative Canty on equal bills to provide disclosure, provide competition, and to look out for some of the most vulnerable in our state. She has been a great champion. I agree that transparency in financial matters matters. You find out that the APR when you take out a car loan or you take out a mortgage for a home. Small business owners, who are the backbone of the state's economy, should get the same information so they can make similar decisions about what's best for them. Yet every year, Illinois small businesses lose nearly $460 million because of loans that hide the true cost of borrowing. Meanwhile, the non-bank lending industry issuing these loans has taken off in recent years and is now worth a reported $20 billion. In Illinois, that $460 million should be going towards hiring workers, expanding operations, and strengthening our local communities. Instead, small businesses are stuck paying the price. And that's because when a small business owner tries to compare financing options, they're often comparing apples to oranges. And when you can't compare loans fairly, it becomes much harder to choose the option that is best for your business. And that is why APR matters. APR is the gold standard, as Horacio said, for understanding the true cost of a loan. It shows the real price of credit over time and is the only way consumers can make an apples to apples comparison when evaluating different types of loans. APR for all ensures that when small business owners evaluate financing, they have access to that same clear standard that other consumers do. This bill doesn't restrict lending or eliminate options. It simply requires transparency so entrepreneurs can make informed decisions. Because small business owners deserve to know exactly what a loan will cost them before they sign on the dotted line. This is why I am happy to be here today. As Horacio said, this is well past time. We've been trying for a while, but I think we have the proper sponsor here to get this bill across the line, and Representative Mary Beth Canty. Representative?
Thank you so much, Mr. Treasurer, and thank you so much, Horacio, for being here today. I'm Mary Beth Canty. I represent the 54th District here in Illinois, and I'm a pretty simple talker when I talk about the issues that I care about and the things that I think we need to do as a state. And so for me, when small business owners take out a loan, I think they deserve to know exactly what they're paying for. To me, that's common sense. I think it's pretty simple. And I hope that you all will agree. I know the people behind me do. For decades, consumers have had the right to see the true cost of borrowing through the APR, but small businesses are often left comparing very confusing things like factor rates, specified percentages, and other numbers. And I can tell you, when I first stepped into this role of sponsoring this bill, I made people sit with me for hours because it just did not make sense to me. I deal with credit all the time as an individual. I am the daughter of two people who owned their own small businesses. And to me, the thing that we all see every day is a credit card statement, right? You know how much you are going to be paying on the money that you are borrowing. You know how long it's going to take you back and what that is going to cost you on a go-forward basis. I think our small business owners, our humans, deserve that same respect. And that's why this legislation is built around one very, very simple and straightforward idea: APR for all. It's not strange metrics for all. It's not APR for a select few who meet certain criteria, and right? It's APR because APR is the gold standard for comparing loan costs. And it's been that standard for a long time, since the Truth in Lending Act, and it remains the clearest way to compare loan costs. I will tell you, this legislation has benefited from some really thoughtful engagement from many different stakeholders, some in this room, but all of whom care very deeply about small businesses. These are not people who necessarily agree with what we are trying to do here, but we are firm in our commitment to providing clear and accurate information for consumers in the state of Illinois to be able to look at their loans and compare those products so that they can make the decisions that are best for them. These conversations are pretty hard, I can tell you. I hold people to a pretty high standard. I don't like anybody to waste my time. I'm definitely not going to waste your time. And so what I will say is I am committed to getting this over the finish line and protecting our small business owners. And with that, I would like to bring up Geri, the Small Business Majority President.
Hi, good morning all, and thank you for coming. You know, it may surprise you to hear that 98% of businesses in Illinois are small. And they're small firms with under 100 people, or they're self-employed or gig entrepreneurs. These small businesses aren't living large. Their median household income is just over $46,000 annually. In fact, Small Business Majority and Georgetown University's research has shown that 1/3 of the people who are enrolled in Medicare nationwide are connected to small businesses. I'm with the Small Business Majority, and we are in our 20th year of being a nonprofit advocacy and policy organization for small businesses, most especially the smallest of the small, and creating a level playing field. We lean into that value of what equity is because we know that they don't have the resources to compete against large businesses. As I've said, 98% of businesses in Illinois are small firms with under 100 employees. And majority of them, especially those who are Black and Latino, tend to be over 80% self-employed. And not disclosing an APR is a bigger problem today than ever because of the soaring healthcare costs and Medicaid cuts, plus inflation, skyrocketing prices from tariffs, as you've heard Woodstock say earlier. It may surprise you that this $1 million in savings could be going towards affordable healthcare for small business owners because healthcare has been cut at the knees for them and affordability with no advanced and extended tax credits and Medicaid cuts as well. Instead, Illinois businesses are losing money. They're led down bankruptcy paths. This loan competition, market competition by these non-bank predatory lenders, it would make Adam Smith cringe. It's why small business majorities research has shown that 87% of small businesses support the Truth in Lending Act on any type of APR, especially for any type of lending contract. Call it an advance, call it a loan, but any lending contract to disclose the APR along with other types of financing disclosures and calculations that they'd like to do as well. It's only fair. So in closing, small business majority calls on Illinois lawmakers to please pass the Small Business Transparency Financing Act. And once it's passed, that Governor Pritzker signs it as well. Now, I would like to introduce, I'm really proud of a small business owner in our midst who has really grown her business to support the community. It is the definition of how small businesses, I think her business is a definition of how small businesses actually create community and create that reinvestment with her coffee shops, plural, actually. She also supports the workforce as well and thriving in the communities to create jobs. And that's what small business owners do, create 2 out of 3 jobs. Please let me introduce the owner of Momentum Coffee, Nikki Bravo.
Good morning.
Good
Thank
morning.
you and thank you and thank you. So yes, hi, my name is Nikki Bravo. I am the owner and co-founder of Momentum Coffee. I'm here today with my daughter, Crystal. We came up from Chicago. I'm also a member of the Small Business Majorities National Business Council. So sharing some things with you today, some that you may know and some that you might not, right? So it's not unusual for small businesses like Momentum Coffee to have trouble accessing loans. Small business majorities research found that only 36% of small businesses that sought funding actually received any. And 24% of those said that the loan amounts actually met their needs. And so with few options, folks like me have turned to non-traditional funders when we've needed that infusion of capital for our business. And so, yeah, I have a merchant cash advance. And I questioned the affordability that merchant cash advance really provided, but that was after the fact. The lack of transparency makes it difficult for small businesses like ours and small business owners to make an apples to apples comparison when evaluating these lending products. And if lenders would use the APR as is required for other types of lending products, business owners like me would have a level playing field to compare those loans. And so the merchant cash advance, was marketed as this quick, low cost, and it was quick, but not really affordable, right? MCAs take their fees up front instead of rolling it into the APR. And if you take time to calculate, those fees on a 6-month or 12-month or an 8-month term, you realize it looks like compound math. So with few options, plenty business owners turn to online lenders that provide easy access to quick cash. The problem is, and you've heard it here today, that fintech lenders aren't required to disclose true APR in a way that's clear and transparent. That makes it nearly impossible to know the actual cost of the loan. And it leads to lending agreements that you find out later on that could be 40%, and in some cases, believe it or not, 400%. And what that does is it bleeds businesses like ours dry. We cannot afford to lose more money from non-transparency of APR. You heard that small businesses are the backbone of our country. These types of products are limiting my ability to do what it is that we want to do at Momentum Coffee. We're rooted in community, we're powered by coffee to serve the people in our community. Lack of transparency in APR prevents us from being able to provide decent wages and benefits that we want to provide to our team. Illinois has allowed bad actors in the private online industry to take advantage of small firms long enough. So I call on Governor Pritzker and any lawmaker in Illinois who cares about the health of small businesses to support legislation that would guarantee APR for all. Thank you.
Now I'd like to introduce one of the representatives of a very close partner of Woodstock Institute is truly representative of community. That will be Gloria Hicks of Community Organizing and Family Issues, or COFI.
Hey, my name is Gloria Hicks. I'm from East St. Louis, Illinois. I am a leader in East St. Louis, and I'm co-president of Power Pack out of COFI from Chicago. And in communities like East St. Louis, we know firsthand what it's like when investment leads, an opportunity becomes hard to find. Small businesses are often the ones holding communities together. They create jobs, serve local families, and help keep our communities strong. But when those businesses are forced to turn to those loans, they do not fully understand the impact does not stop with business, it affects the entire community. Stores close. When the loans turn out to be more expensive than expected, it means they're cutting hours, laying out workers, or even closing their doors. And in East St. Louis, they'll go to St. Louis, Missouri, where it's more reasonable to do. And in our community, it's already been experienced disinvestment and business goes under that really matters in our communities. Non-bank lenders do not clearly disclose the true cost of their loans. It's a big part of the problem. It is the problem. If you know, you won't do it. You'll look into other means to help you out. Without transparency, small business owners are left making critical decisions without the information they need. APR for all changes that. We need that. In fact, every day we wait to pass this law, small businesses lose 1.25 million to loans to hide the true cost of borrowing. That money is leaving our communities every single day. And frankly, if small business owners had the information they need, more would be available to stay open. APR for all and keeping those dollars where they belong in our neighborhoods, supporting our businesses, and strengthening our future. We need this. Please help us continue the fight. We don't say, don't give us the loans. We just say, let us know what they're about. Thank you.
Wonderful, thank you so much. In closing, I would ask folks to take a look at who's supporting this bill and this movement. It ranges from organizations like Woodstock Institute and COFI and Allies for Community Business, but 3 Black chambers of commerce. The Illinois Hispanic Chamber of Commerce, I think, is represented here. Thank you so much for making it. Almost all of the administration leaders, from the treasurer, to the controller, to the attorney general, when we ask leadership out of frustration, who can we have champion this through the House that is smart, can learn the issue, and can get it across the finish line? Because that's been the frustration. We've mentioned this a number of times. They all said the same thing. Representative Canty, she's good, and she's gonna get it, and she's gonna be a great champion. We can't thank you enough for how you've taken this on and championed this movement. The national associations of community development financial institutions, the small business majority, this is the A team. And then added to that, because this is not an us and them issue. If you pay attention to the board that's in front of us, as well as their website, the American FinTech Council is supportive of this. So that is essentially an organization that believes that much of this predatory activity is a stain on the entire financial technology industry. And they are a champion on this with us. What more do you need? So let's get this thing across. So, any questions?
You mentioned a couple of times that this time you've got the right sponsor, but what else is different this time?
Well, anybody want to take that or you want me to keep talking? Well, each time we've gone through this, we've learned much more of the communication tactics of the opponents in terms of how it is that they're trying to mislead certain legislators, saying you can't calculate an interest rate on this kind of loan or that kind of loan. And it's taking us a couple of years to be able to bring up the level of knowledge throughout all of our stakeholders, including some of our legislators, to really understand the depth and the granularity that this is not all that complicated. This can be done. So each time we've gotten better at how to communicate it and then how to be able to educate constituents and legislators on the issue. And I think that now we're kind of at a critical mass right now. Geri?
I'll answer that. What's different this time is that we are in a different climate, policy-wise and politically speaking. The Consumer Protection Financial Bureau, CFPFB, that Horacio mentioned earlier, has also been essentially dismantled. That is the agency that actually goes after the bad actors. I was with the Small Business Administration prior to this as the regional administrator overseeing Illinois and 5 other states. We have seen the SBA also defunded and the field cut at the knees as well. But in fact, the SBA has also said that these types of loans are also extortionist. The Small Business Administration, since 1953, supporting equity in a level playing field, has noted these loans are extortionist and cannot be used to refinance SBA loans. So that's what's different this time. We're seeing the Federal Reserve also talk about this, and PR even more. There's a at the table to get this passed, because this is rising costs and affordability. The small business owners can't help but pass those costs on to consumers, some of them. And so if we're talking about affordability, healthcare, goods, services, groceries, gas, for God's sake, I think a lot of us figured that out coming here. This is the time to do it.
The different values, we're not gonna stop. We're gonna continue till we get it.
A lot of times we're at events like this and it's about helping the little guy or helping the maybe lower income or underprivileged folks, but I'm getting the idea that the people who are going to be helped are across all incomes. Why do I know?
Yeah. Yes. Definitely.
You nailed it. It's APR for all, right? So this isn't just for a select group. It's not for a targeted area. This is for everyone, because this is what makes sense for everyone, everywhere. APR is the gold standard. And we believe very strongly, and I believe personally very strongly, in transparency and telling people what it is that they're getting, what it's going to cost them. That includes APR. And so, yes, we're talking a lot about small businesses, but they aren't the only ones who will be helped by this. It is for everyone.
Any other questions?
I'm wondering what you guys are hearing from like the critics, the opponents of this issue. What's their argument for not wanting to disclose the true APR?
So most of the time, what we're hearing from them is that, quote, APR is a made up number, and that people don't actually understand what APR means. And so why should we bother to do it? Using one APR number is just a point in time. And to that, I say, assume for a second I take your argument as true, right? But a specified rate or a factor rate is also a made up number. And so if we're all using made up numbers, then great. put my made-up number on there as well. Because my made-up number is the one that we all see all over the place all the time. So I can accept as true their position, that it's a made-up number. If they can also accept my position, that their numbers are equally made up, and so we should give them equal playing time in a disclosure statement.
I think that was a really good way to stop. Great finish. I love that. Any burning questions? No. Well, thank you all so much. Really appreciate it.